can trade Forex with the counterpunch trader as well. It works exactly the same way. Yesterday there was a really nice trade on pound Aussie using a 377 tick chart. That's a nice chart to use for a lot of different markets. You'll notice we were using the same chart for crude oil. And starting at 8:30 US Eastern Standard Time, there was a short right here. You see a long also. The long actually started here, but that one's coming down and ends up canceling. Instead you get a short. So counterpunch was really quick to identify the possibility of a long trade, but then instead changing its mind and going short. And you get your setup. You get a lot of information here in the data window. Your entry, 3 targets, your stop. The entire trade is planned out for you with the click of the mouse. And you also get how much you're going to earn to each target. So 35 pips, 47 pips, 59 pips, and how much you're risking on each trade, 28 pips. You have to include spread, so it's a few pips more than this, of course, and the reward is a few pips less just because of spread costs. That's how Forex works. But notice your risk-reward ratio also. You can see it's favorable. It's better than 1-to-1 to each of these targets. In fact, it's 2-to-1 to target 3. And so it triggers in, and you could take a percentage of your profit off at each target. The way I have this set up is it takes a third off at target 2, a third off at target 3, and then it trails that dotted line, the signal line. And so it comes down. It's pretty good trade. When it gets down to here, then the stop moves from here to here. Notice that the calculator did that for us. You can see the green hash mark moving down. It not only locks in, but it also trails the line. So it actually pushed the stop even further down to here, and then it just trailed it all the way down, and that line keeps the price in the trade. Doesn't stop out because it moves after the bar is closed. So it was still here when this red bar formed. After the red bar finished, then the stop knew to move down. And so you're able to pick up target 2, and that was a nice 47 pips. So say after spread it was 44 pips. And the stop still held, and it came down and hit target 3. Good for another, call it 56 pips after spread. And then it stopped out up here. Really great trade. You can see it worked exactly the same way as the crude oil trade. All right, thanks for joining me, everybody. Really excited for the upcoming release of the counterpunch. Make sure you get yourself registered. We'll be holding it later this month in May. Have a good weekend, everybody, and I'll see you on the next video.